This week on the podcast, cash is trash. But what should you be doing it and what do the smartest business owners do? Welcome to the Profit Cash Growth Podcast. This is the podcast for 6 and 7 figure business owners who are looking to grow a financially successful business. My co-host, Claire Hancott, is a finance director, chartered accountant and entrepreneur. And every week, I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow and grow your business. So, Claire, this week you've been preparing to get a job advert out to hire people, and you've been asking me a lot about questions that you want to ask them, haven't you? You've been prepping questions and various other things.
Yes.
And I said in the car on the way here that what I would do moving forward, especially with AI and not being able to trust things, I would make it a prerequisite of any hiring process that somebody turned over their YouTube feed to me at the end of the hiring process as the final part of the challenge, because I could work out in less than 60 seconds exactly what that person was. And you went, stop that. I want to talk about that on the podcast. Why do you want to talk about it on the podcast?
I think that's really true. I think one of the things that, we're all better at is using AI to write things, aren't we? Write emails, write content. And so naturally that's going to extend to writing CVs and answering questions. So what I was working on was like some pre-screening questions that will give us a real good flavour of whether that person's going to fit in our culture and have the right sort of attitude that we want. But yeah, what would yours be?
But the problem is, do you not think, I think the problem is now people are getting savvier and savvier at answering the problem is if you give people a load of questions like that, I feel like too many people answer what they think the right answer should be than just answer it honestly. And I think that's a problem.
I agree. I think that one of the reasons why, so what we've done now is we've decided to put this pre-screening process up front to get an idea of their personality and the cultural fit in the business. We were thinking about going with maybe like personality style profile questionnaire, like if anybody's ever done like Insights or DISC or something like that. But we felt that was a bit too heavy and it was much more about how that person would fit in our culture rather than understanding their personality traits. So we've just gone with, I think there's 7 short questions, but sometimes people will give us answers that are just clear they're not the right person. But then what we really wanted to do is have that first pass so that when somebody does make it to the first stage interviews, we can then probe deeper and clarify that the answer that they gave us is true and we've understood it correctly.
And I just think your YouTube feed tells you everything about somebody.
I
got this idea from somebody that I was watching who's just doing a real like clickbaity video, how to get rich. But his point was absolutely
Ali
right.
Abdul, wasn't it?
Yeah, and his point was absolutely right, which is and he said this about anything you want to achieve. He said he's come to the conclusion after years and having got there and various other things that you basically have to have an unhealthy obsession with the thing that you're trying to achieve. And he said, if you want to be a top martial artist, you need to have an unhealthy obsession with what you want to achieve. If you want to become the very best footballer, you need to have an unhealthy obsession. We see this with people time and time again. I mean, the sports person that comes to mind is Tiger Woods, for example, an unhealthy obsession with becoming the best golfer.
What would your last 3 YouTube videos be then?
They would just all be business or property because I have an unhealthy obsession with property and business. And that is the reality, isn't it? What would your feed show me?
I have literally just been watching the CrossFit Games. Before that,
it's full of women in short pants, isn't it, at the moment?
And men as well, yeah. But no, that's because I've been using your YouTube Premium account to watch netball a lot.
Yeah.
I've been watching London Pulse games in particular. They're essentially like the Premier League winners of the netball world. And then I watch a lot of business stuff. So I think the last thing I watched was something with Daniel Priestley.
But it's absolutely brilliant because if I was to look at your feed and I'd look at the 10 videos that were serving you up, it would completely and utterly tell me who you are, both personally and in business. It's fantastic because you're absolutely right. It would tell me that you really love netball. It would tell me that you really love fitness because there would be something in there around muscle fitness, weightlifting, that type of thing. And it would tell me that you're really engaged with business because there'd be lots around business and there'd probably be a little bit of finance stuff thrown in there, but probably not actually. And there'd be a lot of politics stuff, which tell me you really quite like politics, and that would literally have nailed it on.
So everything you need to know, isn't it? I think the difference would be is that if you went on and I'd say actually that's probably been maybe not my YouTube feed because I think it's maybe a lot as you get a bit older and more recently we got into YouTube, but go back 10, 15 years and even when I was a lot younger, I don't think my interests have changed that much. Whereas I think most people these days, they're just watching like I don't really think you could say you're interested in like Mr. Beast, for example. Like
That's entertainment. That's just entertainment. Yeah, it's different. And I think you could,
but I think that in itself is telling if somebody, you know, when you ask somebody what their hobbies are, if they don't really have a hobby, I think that's telling about that person in particular.
Yeah. And I think you can do this with YouTube feeds, and you could probably do this with podcast feeds. It'd be interesting. But I said this to you, didn't I? You can't do this with TikTok feeds.
No.
Because, if you did it with mine, you'd be like, girl in pants, girl in pants, girl in pants, girl in pants. And it just wouldn't work, would it?
Girl in pants and cats.
Girl in pants, cats. Girl in pants, cats. And I just don't know why it feeds me that stuff. Whereas if you go on,
I know exactly why.
If you go on the professional sites, it's a totally different thing. It's just, it's different horses, different courses. And I think the right course for properly assessing somebody in a rounded way is the long form world, because, you know, it just seems to be truer to the person. Anyway, interesting one this week. Let's move on to this week's news story of the week. So we couldn't not pick up this week's news story a week, could we, Claire? And that is, of course, the big story that the UK economy expands at the fastest pace in a year at 0.7%, and also the fastest growing economy in the G7 this year. And obviously lots of surprises around that, because the policies, the mood music, the noise, everything that's going on would suggest that we should be getting the complete opposite to the news that we got. So, thoughts?
Yeah, I think the spin that Rachel Reeves put on it was that it's great, but that there's still a lot of work to do, which kind of tells us that even maybe they were pleasantly surprised with these statistics, and that we shouldn't expect it moving forward. So I think that says everything that we need to know. But I thought what was really surprising is when you start to dig behind these numbers and really understand what's driving them, which is, you know, essentially the point in everything that I shout about, is you've got to understand what's driving the numbers and then make a decision about them. And what I thought was really quite interesting about this is, so we had growth of 0.7%. 0.4% of that was down to the aircraft industry. Aircraft and airships, as is the official category for it on the ONS statistics. But essentially, they're saying that due to the tariffs, people brought forward huge values worth of shipments from the likes of Airbus and Rolls-Royce. And
ship them like quickly before the tariffs. Exactly. So we've just moved vast amounts of trade. And I've seen this. You saw that with that. In my industry, of course, we had the stamp duty holiday, which ended. And what we've seen is we had an absolutely phenomenal month that month, and we've had two of the worst months we've ever had in trading since. So it's a complete and utter example of where transactions have just been pulled forward into a completely different quarter that's going to be highly damaging in the quarters now. The other thing that's interesting, if you go in the ONS and really break down the data, they have like they have sort of 7 different pillars of where the numbers go from, and you can see where they're tracking. And most, if not all of the 0.7, all of the growth is coming through a line that is all about business investment. It's not clear exactly what's wrapped up in that, but what is clear is all the lines that are to do with consumer spending are completely flat or negative.
Yeah.
The one line that was positive as well was government spending actually was down as well in that.
I think that might just be like a rounding error, but
it was down.
It wasn't up. I think that's a celebration.
Well, for the first time in a long time. But I think, so I think behind the numbers, I think the noise is well and truly not out of the woods yet. It's clear that consumer confidence isn't growing because consumer spending hasn't grown, and there's been a huge amount of timing issues. And you would know this as an accountant with people's accounts and various timings can everything, isn't it? You should be spreading things. Really, if you were accounting properly, you'd spread it, wouldn't you?
Well, one of the things that probably, if you've not worked in big business, maybe in finance, you probably don't realise how many big companies will have a calendar year as their year end. Because it's actually this weird anomaly that the UK's got this weird thing of like the 5th and 6th of April as like the start and end of the financial year. Most organisations around the world work on calendar years, and therefore all of these massive organisations have just kicked off a fresh year, fresh budgets, fresh drive, and there's always an uptick in business investment in Q1. And that's also a lot of the area that increased the most when you break it down on the ONS statistics was business investments.
Well, it wouldn't include that because obviously this is Q1, isn't it? January, February, March.
Yeah.
I think. But Q1 for a business that's running April to April would be April.
Yeah, but
May,
that's something that's specific to UK businesses.
Oh, right. Okay.
And actually, when you think about the larger businesses in the UK,
they're buying from UK businesses, you mean?
Well, no. I mean, they're running on they're global. So they don't care that the UK's got this weird tax regime that ends in April. Actually, their year end is calendar year.
Which are you global, sorry?
Bigger organisations in the UK, typically their year end will be a calendar year.
Oh,
not
okay.
the financial
Fine, got it.
year that smaller businesses tend to stick to because they can align their personal tax with their business tax. Much bigger organisations, which is obviously the vast majority of it. So they've all kicked off their fresh year with fresh budgets. And we can see that business investment is also accounting for a lot of this growth. Yeah. But I think the one thing that we haven't yet mentioned is the amount of spending that was brought forward due to Donald Trump's, what do you call it?
I think that's
Liberation Day.
The tariffs. Trump tariffs. So I think it's one of those where I just think I want to see the next quarter before I got excited.
Well, just one more month of it, I think. I think we'll see that April falls off a cliff when they release those statistics.
Yeah, well, it's certainly interesting because the data and the noise in the country doesn't suggest that it doesn't match the growth that we should have. So let's see what the rest of the year, and no doubt we'll update on it later in the year anyway. So great. Let's move on to this week's deep dive, Claire, where on the back of the UK growing so much, what if you personally have too much cash? That's what we want to talk about today, isn't it? So, too much cash, Claire. We're going to talk about the 6 things that smart business owners do next. But can you explain for the audience, what do you mean? Why are we talking about this? And why is this, quote unquote, a problem?
Yeah, now this is surprisingly more common than I think people would realise. When you have particularly an older business that's been around sort of 15, 20 plus years, and also like second generation businesses that have been passed down from, the parents normally to the kids, for example. But also just some businesses that, in an industry that means they can be quite cash rich. And in the last I've spoken to 7 businesses in the last month alone that have got $1 million plus sitting in their bank.
Yeah.
And that's roughly, these are businesses that are doing sort of somewhere in the region of 2 to 3 million a year. So that's roughly about a third of their turnover just sitting in the bank. And they're cash positive on a general monthly basis. And this number's just growing and growing.
Yeah.
And the conversations that I'm having with them is that sometimes there's a valid reason for that money being in the bank. They're waiting to do something, or there's a specific thing that's, unique to their business, which means they keep it. But often what I find with a lot of these businesses is that they know they've got the cash in the bank, but they don't really know what to do with it. And so it's just sitting there rather than it being there for a deliberate reason. And I think that's what we want to focus on now, is that you can absolutely keep £1 million plus in your bank if you want to, but make sure that it's a deliberate choice and not something that just happens because you don't have a B plan.
So what's the most common reason that they are hoarding that amount and not just taking it for themselves, paying themselves more?
Well,
enjoying their life.
It gets to a point, we have this discussion quite a lot. It gets to a point where it's just not worth earning over 100 grand sometimes in the year because of the tax. So the more you can put a lot through your business and pay for a lot of your lifestyle through your business.
Max their pension out, max their earnings out to the point where they want to, and all the rest of it.
You've got a couple of family members earning 100k each from the business, plus all the benefits that are going through the business.
Your head goes, if everything I take out now is going to be 60% taxed, I might as well leave it in the business.
Exactly.
I can understand. I really can understand that.
So, they've got fantastic businesses, they're rewarding their staff, and they've got a very good lifestyle, and they don't need any more money.
Okay, fine. So let's move on to these 6 things then, Claire. So this is 6 smart and deliberate things that business owners can do when they're in a situation where they've got lots of cash.
Yeah.
Great.
So I think what we want to get out the way right away is that there are some businesses that hold cash for a very specific reason. Okay. So, for example, when you're in the haulage industry, if you have an operator's license, like HGV vehicles, your operator's license requires you to carry a certain amount of cash. So that would be a very good example of where there's a very deliberate reason why they have cash in the bank, because it's a legal requirement of their licence.
I suspect this is the same with financial organisations like FCA registered organisations.
Yeah, some FCA organisations.
Minimum working capital
and
things like that.
So sometimes that's the reason why it's happening. But also, like an example, I had a board meeting with a business this week, and they were saying that we were talking about their cash flow, and they were saying that their preference is to work with smaller suppliers that they can't take advantage of paying them, 60 days in a month and things like that. They're paying sort of 7, 14, maybe 30 days because they're much smaller family-owned businesses that they want to work with because they get a better level of service. And again, that's a deliberate reason to hold this cash so that they can work with these smaller businesses that perhaps can't extend credit terms to them.
Okay.
And I've got other businesses that I work with that just say, do you know what? We don't want our bank balance below 500. Having that amount of money in the bank just allows us to sleep tight at night, knowing that we're not going to have this cliff edge where we don't have enough cash. And that's perfectly valid. That's a decision. What we've done is we've painted a picture with the numbers. We've explored all the different options. We know what the cost is of keeping that money in the bank, but the business owners have made a decision that says this is right for us, and it's a deliberate decision that they're making.
Now, so you've sort of touched on risk mitigation. I wrote risk mitigation here as one of the drivers. I don't think that's one of the 6 that you've put it specifically, is it?
No, but it's more about, I think number 1 was about holding cash for a specific reason. And that might be that risk mitigation. It could be that you've had a bad experience before. It could be that it just enables you to sleep at night time.
I can immediately think of two or three, but even this morning when we were in the gym, I was listening to a podcast, and here's a good example. It was a company that sold jewellery on Etsy, and it pretty much only sold jewellery on Etsy, and all of a sudden they said literally overnight Etsy wrote to them and changed their payment terms to 65 days from literally 7 days. And they were left with this massive cash. So
Amazon have recently done this for a lot of small businesses.
So risk mitigation is a valid, very specific and very sensible, smart reason. To a degree, you've got to understand what the maximum level of that risk might be, and then hold it up to that point. You don't want to hold it surplus too far, but that's what the kind of insurance is for.
And I think that it's fair to say that the younger business owners that I work with are quite comfortable normally taking risk, and they'll literally be like, fuck it, spend it all. But as people get a family and get further towards retirement, that risk tolerance does tend, not always, but it does tend to decline a little bit, and they like to hold a bit more cash just for that level of comfort. Ironically,
the exact way that pension firms structure funding, isn't it? It just high risk when they're younger, and lifestyle it out, and because you haven't got time to recover. Yeah, I get that. Brilliant. So the second one, Claire.
Okay, so number 2, when you've got a significant amount of money in the bank, you need to think about spending a significant amount of money. So one quite obvious thing to do is to try and buy your commercial premises that you're trading out of. That makes sense because obviously at the moment, if you're renting or leasing a premises, that money's just going out every month as a cost. Now, you're likely to swap rental payments for mortgage payments.
Yeah.
In terms of like for like, as a rough guide. It does depend on where you're buying and things like that and interest rates, but generally at the moment with interest rates, your rental payments would likely equal your mortgage payments. So you're essentially paying out the same cash flow every month, but you're building up that money in an asset.
Yeah.
So it makes sense from a business perspective. So sometimes you can also reduce your costs, which would increase your profit, because sometimes your interest payments will be far lower and your mortgage payments will be far lower than what you're paying for rent.
So it's the first thing you just need to be thinking about when that money's there, which is, is it possible for me to buy this property? Look at the lending quickly, because if you've got enough of the deposit, you've got 40% of the value of the business, of the building or something like that, some brokers can even get 25%, just do it. It's a bit of a no-brainer, isn't it? And the money's not going anywhere. It's stored in the property. The property doesn't go down very often, if at all, and it should help your cash flow in the business because you're paying yourself effectively for the rent.
Exactly. So what you do need to do is, if you are going to go down that road, just get a bit of tax advice before you do it, because whether you buy the commercial property, it's whether you buy the commercial property in your business, your trading business, if you set up another limited company, or if you buy it personally, you really do need specific tax advice on that.
Great. So number 3 is
to pay down debt in your business.
Okay.
So if you've got asset finance, maybe you've got a mortgage at the moment and you just think, we've got all this money in the bank that's not working for us. Why don't we pay down that debt and reduce the interest costs, especially at the moment with interest being, okay, it's arguable that interest isn't high, but it is high compared to what we've seen in the last sort of 5 to 10 years. So for that reason,
that's a tough decision, because you pay down debt, well, I would have perhaps said pay down high interest debt. Because actually anything that's around the kind of rates of mortgages and basic business and things like that, usually you can make a higher return than the percentage you're paying on the interest of that money at any given time if you're a good business owner.
Yes.
But if you've got high interest debt, which I don't know what that would look like in a business sense, but if it's up at 17, 20% a year, you need to be starting with that, don't you?
Yeah, absolutely. And also, you've got to remember that interest that you're paying is normally always more than interest you're receiving. So if you're just going to have that money sitting in the bank because you don't have any other plan for it now.
Yeah, then that is obvious.
That is the thing that makes sense.
So there's basically, you need to run the numbers on this. You basically need to ask yourself the key question, which is that money that's sat in that debt at the moment converting into a higher return than the interest that I'm paying on that debt?
Yeah.
That's the question, isn't it? Brilliant. Number 4?
Sorry, I'll just add to that as well, that's a fairly, for me, that's always like a no-brainer one, because it's really actually quite easy to refinance.
Yeah, just take it back out. Yeah, pay it off. Just you take it back out. If you need to.
So if you ever found yourself in a situation where you wanted that cash back to do something different with, then actually you can get asset finance and secondhand assets and things like that. So
the consideration there though is that you might be paying off something that's on a historical really good interest rate, and then if you took it back out, it'd be a real problem. So you've got to be a little careful with that. But I hear what you're saying there. Definitely. Cool. Number 4.
Number 4, buy another business. There's a saying.
Simple as that.
There's a saying in the business world, which is when you're sitting on a lot of cash, generally buy or be bought.
Yeah.
Because if you're a cash-rich business, you're very attractive to other people. Now, of course,
because it's low risk.
This more applies to like the much bigger corporate world where all of a sudden somebody's bought all of the shares in your business and they own you and it kind of wasn't what you planned. Whereas obviously in small businesses, you're not going to accidentally be bought by somebody. Yeah. But that's generally, that is that mentality that businesses that hold a lot of cash should look to buy another business, or somebody will buy them because cash-rich businesses are very, very sought after. So from that perspective, that's a key consideration, because often you don't need a huge amount of cash to buy a business because you can structure the deal with finance and vendor finance and deferred payments, etc., etc. But you do always need a lump of cash behind you because there'll be things you haven't considered. Also, I would always suggest that when somebody's going from being the sole MD in their one business to all of a sudden stretching themselves over 2 businesses, they need to probably invest in their current business a little bit. So you'll need some cash for that to beef up your management team to free you up to do an acquisition. Yep.
Great. Number 5.
So number 5 is the final one that we've got here. And these are not really in any necessary order. And to be honest, this is my favourite one. And that is to invest in your own business.
Yep.
So this could be opening a new area. If at the moment you're geographically restricted, for example, open another location, go to another country, go big with some of your marketing campaigns, introduce a whole new product line or a whole new range of something, whatever it is that you need to take your business to the next level. If you're sitting on that cash, now is the perfect time to sort of go big or go home.
I've written here, invest in your management team, because there are times, and it absolutely shocks me because it's not how I like to operate, where we see business owners who are absolutely run ragged with £1 million set in the bank.
Yeah.
And they could deploy 100 grand of that into two really senior managers that would just make their life so much easier and by default grow the business faster.
Do you know what? It's really interesting because I had a board meeting last month with one of the businesses I work with, and that was exactly what I said to them. I was like, you've got so much money in your bank, you are so profitable, but you are absolutely
burning out,
ragged. Yeah. And I was like, the only thing holding your business back now is the fact that you haven't invested in the team. So you need to take a hit to your profits, you need to take a hit to your cash flow, and you need to build the business for the future. And you're primed to do that because you've got excess cash and you've got excess profit.
To be honest with you, in many ways, if you get that right, and there is, we could do a whole podcast about hiring the right people and how challenging that is. But when you nail it, that also will just pay back, and it will just lift your business. It's just how it goes. So yeah, I'm totally on board with that one.
I think what a lot of business owners do is that they get very used to, you get used to bootstrapping your business. You might take some loans out as you go along for equipment, particularly like vehicles and things like that. But beyond taking loans out for a few $100,000 at a time for equipment and or getting a mortgage, this prospect of ploughing 6 figures into your P&L in 1 year, for example, on marketing and new teams and product launches and things like that, is not something that we see very often. Yeah. And I think that's what I find most interesting about a lot of the businesses that I work with, that actually, if you've got 500k in the bank, yes, you could buy commercial property, but I mean, I don't know, I just find that a little boring. I'd rather put 500k into my business and see what I could do with it.
Do you know what I've wrote here? Just the word experiment. And I tell you why I say this, because Stephen Bartlett has a role in his company called Head of Experimentation, and their only job is to constantly test new things and report back how they've gone and whether they've worked and what's going on. And you like, even if you just have a budget for that, because you're constantly testing new things, the way that your business will move forward will be phenomenal. So again, just use a bit of the cash for something like that. Do something, interesting with it.
Yeah.
Great. So number 6, I've interpreted totally different to what you've put. Just so it might as well say the words "cash is trash," right?
What do you mean?
Because it's just like, do anything at all, anything you can. Just
no. Okay, so
go on.
this
So
one,
what is it? Number 6.
This one is
words.
about taking the money out of the business and making a more traditional investment. So separately to your business, buying commercial property that you're going to rent out, investing in a buy-to-let property, residential property, gold, stocks and shares, that type of thing. Now, there are some clever ways that you can do this with the money. I think most people don't do this because they think they have to take the money out of their business and pay tax on it before they can invest it, but you don't have to. You can do it via the right structures of holding companies and things like that, which means you can do intercompany loans, transfer the money to another business and have that as an investment business. This is what people do when they tend to be more older. I think that's the only nice. I was shying away from using that word, but I don't know why. Older people tend to do this because they're thinking about what's my retirement pot.
Yeah, I think this is just like, I take this view very strongly on it. Like, arguably the cash is trash line. What I mean by that is you've got that money sat in the bank, depending on your skill set. If you gave me that money, I know that I can turn cash into a minimum 20% return on investment year on year in a medium risk way. So for me, it'd be like, of course I don't want it as cash, because cash doesn't generate much, if anything. And even the best interest accounts for businesses, what are they? They're not the same as personal, are they? Generally, they're constrained a bit further.
Well, it's interesting because a lot of the businesses that I work with, when they are cash rich, they're getting several £1,000s a month income and interest.
Yeah.
And that is skewing their thought process about cash. And I always say to people, the ideal bank balance in a perfect world is 0.
Yeah.
Because cash is a resource, just like a team member. You wouldn't pay a team member to sit in the corner just in case you get busy.
Yep.
So you shouldn't have cash in the bank just in case you need it. Now, in the real world, you want to sleep at night. You want to feel comfortable that you can meet your obligations and you're not putting your business at risk. So I understand why people keep a certain amount of cash in the bank, but keeping too much is like keeping an employee in the corner just in case.
But if they put that cash into assets that are lowly leveraged, it means that at any given time they can literally draw down on that asset by raising finance on it quite quickly. If it's a property, certainly if it's asset finance for a business, fairly quickly you can get your hands on that cash again, very quickly. We know this. The beauty of having assets surrounding your business, one of the best strategic things is that you have at any given time, if you see an opportunity and you need to raise 50 grand, you can just mortgage that to drive that 50 grand
or get
quite
finance
quickly,
on it,
or get finance on it. So you're not saying goodbye to that cash forever. You're tucking it away in the right drawer for a period of time, is the way I look at it.
Yeah.
Awesome.
Absolutely.
Thanks, Claire. I thought that was quite an interesting one and good to sort of spell out. I think often people just don't think, they certainly wouldn't have thought there was 6 really smart options to do with their cash.
Do you know what? We could sit here forever and suggest things
there's
that
loads
we could do with it. There's
yeah,
loads of different things. And
you
I
haven't
also
even talked about Trump's Bitcoin. What's his Melania coin and whatever? You could no, don't. We haven't put Bitcoin on here.
I also think I'm very aware that we've probably pissed off a lot of our audience today, thinking, who are these people that have got so much cash they don't know what to do with it?
I know, but they do exist.
Like I say, it's. In 9 times out of 10, these are businesses that have been established for 20 plus years. So it's not to say that, it's not to say that you're not going to get there. This is years worth of building up cash reserves. Yeah. Most businesses find themselves in this situation.
Amazing. Brilliant. Well, let's find out what we've got in this week's Profit Cash Growth Extra. So Claire, this week I'm going old school.
I love this.
What? You love it because you've finally got on the bandwagon after 5 years of me doing it, haven't you? Today, my Profit Cash Growth, ladies and gentlemen, is this amazing thing called the library.
And it's groundbreaking, isn't it? I did post the other day, though, on LinkedIn about how I was quite pissed off when I went into our library, because I've been on the online is tend to be where I get my books from. But I'm not. I read a lot of books, but I like shorter form content a bit more. I like articles and white papers and things like that, because I like to sort of bite size at a time. So I haven't really been dead into the library, but I was bloody horrified when I went to the library where we live, because the business section was labelled hair and beauty. So I went upstairs and said, you told me where to go and find it. And I went in there and I came back downstairs and I was like, I can't find it anywhere. And you were like, I'll show you. And it was, oh yeah, it's got the wrong label on it. And there were some good books in there.
Well, I did point out to you that the only few good books that you pointed out is because I've added them to our library over the last sort of 5 to 10 years, because I order new. And this is something that opened my mind with it, that you can actually, if they haven't got the book you want, which they pretty much always don't when you're into business, you can just request it and they'll go and buy it for you. And they'll put it in the library and put it into the system. It's a bit, it's not an efficient system. You put your request in, it disappears for 8, 12, 16 weeks. But eventually you get an email saying it's ready for collection. And there you've got a new copy of that book ready to read, and then it stays into the system. So I feel like I'm doing two things. I'm getting access to some of the books. And don't get me wrong, I buy a lot of books as well. But it's just a nice additional one if you don't want to really, if it's a book you think I'm not going to keep it for long and read it again and again. But I'm also adding to society here, because I am improving the business book section of our library, is the way I look at it.
What I think is really sad is pretty much every book in that section is unread.
Yeah.
Absolutely brand new, the ones that are already there. So yeah, we are single-handedly trying to raise the business intelligence of our local town, but let's see how it goes.
Great. So that's our Profit Cash Growth Extra this week. So thanks for joining us for another week's podcast. As always, if you think you might have outgrown your current accountant and you'd like to work with Claire and the team at Profit Cash Growth, you can go over to the website profitcashgrowth.com. On there, you can request a free financial health check. You can look back to all the past podcasts, loads of blogs on there, absolutely loads. And as always, please, if you just go to the top corner of this podcast, you can copy the link, you can share it with a friend, and if that friend also has a business, then that would be absolutely ideal. And if you're one of the few that knows a friend that's got £1 million in cash in the bank, send it to him and say, you definitely need to listen to this one, mate. And we'll see you again next week.